Hello everyone, welcome to the IchimokuCharts.com daily analysis for the Euro US Dollar FX for Tuesday, July 16th, 2013. Well, a change of trend today and a candle that's made a higher high and a higher low. The candle we're analysing is this large white body candle on the chart. And that last candle is that we see on the chart, this black candle is still currently developing, but quite a bullish candle today, in line with the size of the body of the candle from three trading periods ago. And we're now seeing continued bullishness that we saw when the market began trading from down around the 127.5 area. Some very strong bullishness in this market at the moment. If we look at this very small retracement that we saw with these small black body candles, it really said something about the lack of strength from the sellers and the strength of the buyers in this market at the moment, with the buyers making very substantial net bullish progress on the day between the open and the close for these two very large trading days. And then now for today, it does suggest that the buyers have found some very solid upside momentum, and it does suggest that there is a possibility of this market trading to higher levels. Now, a very strong barrier, however, for this market just above this 131.96 level has been an important level quite often in the past as support and resistance. In the most recent past here, it held as very strong resistance, and we saw very strong price rejection after the market had that very rapid price appreciation in the last week or so. Prior to that, we saw the area hold as support. So moving forward for tomorrow, it has potential to be strong resistance once again. If we do see a strong bullish close up above that level, we could see the market trade substantially higher and test even up to this 133.20 level. We will have a strong barrier before there with this highlighted yellow zone, but a close and a bullish close up above the 131.96 level will be significant for this market, and it is likely or a good possibility when we consider the strength of these white candles in this recent first and second time frame uptrend, and the lack of strength from the sellers as they tested down below the 130.25 level and below the cloud where the buyers came in very solidly. Now, for today's candle, with the buyers making a substantial amount of net bullish progress, they've also closed with very strong control of this market and shown very strong commitment to taking this market higher. They've been in control of this market for most of the trading day today. Now, in terms of the Fibonacci extension, we're examining the relationship of this new first time frame uptrend to the previous time the market was trending up, and here today we've seen the market interacting with the 38.2% level. It does suggest that there is a possibility of a change of trend, because we saw the market testing above there and be rejected from there, and the market has closed right at the 38.2% level. I suggest that because of the strong bullishness in this market, that it's unlikely that we will see a change of trend here. So I doubt that level will hold, and if we do see the market trading up through the high of this current candle in a bullish manner, we could quickly see the market testing to the 50% level, and that's at 132.17, and coincides with some previous support around this area, so could hold as resistance now, but also up to the 61.8% level at 132.70, and that coincides with support that we saw previously in the recent past. So they're two levels that we do need to watch if the market does break out above the 38.2% level. In terms of the Fibonacci retracement of the prior downtrend, and it was only a minor downtrend that we saw, this bullish candle has taken out to all of the important areas in one candle through the 38.2% through to 50, the 61.8%, and even closed up above the 78.6%. So the 100% at the moment is a target at 132, basically coinciding with that very strong resistance that we have close by. The next level above there is the 161.8% at 133, and that coincides with some previous support that came in around that level from these candles as well. So another important level we should be looking for if we do trade in a bullish manner up through that 132 level. In terms of Ichimoku, a bullish signal today with the market now trading up above the Kumo. A couple of trading periods ago we saw the market break out up above the Kumo, giving us a signal. It was an interesting candle where we saw the buyers close with a moderate amount of control, but they did lose commitment, didn't give us a lot of confidence in the breakout. But subsequently, seeing this sell-off and the weakness of this sell-off, and the support coming in through the bottom of the cloud, and now the buyers coming back in strongly. A bit more confidence in this breakout above the cloud with this bullish signal. We've also seen the market close up above the Kijun Sen in a very strongly bullish manner, giving us another solid buy signal, and that has occurred up above the cloud, so a lot more confidence, and does suggest that this market may be destined for higher levels. The market is trading up above all of the Ichimoku indicators, so that suggests that we have a bullish market in all three time frames. But looking at the Chiká span here, that's below the corresponding price action, so it's not supporting what we're seeing in all of those three time frames. So it does diminish our confidence to a degree. So I suggest that what we'd probably like to see is this market close up above the 132 level in a bullish manner before we consider that the market may have built enough momentum to trade up beyond these levels to around the 133.20 level. Now, if this market does come off as it's doing at the moment, we should be looking to potential support around the cloud, the top of the cloud here, coinciding roughly with the area where the Kijun Sen is, and coinciding with the previous level of 130.79. So that has potential to hold as very, very strong support for this market. And the support extends all the way down to the bottom of the cloud, which coincides with the 130.25 level of support. So very, very solid support down below, suggesting that there is a likelihood of this market trading higher. So let's watch the area around the high of the current candle for a potential continuation of the trend, but really 131.96 and just above to the 132 level are crucial to this market trading higher.